Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we dive into the latest economic news and its impact on the cryptocurrency market. Today, let's talk about a major development in the world of inflation. The Consumer Price Index, also known as CPI, just came out with some surprising numbers for March. According to the data, the headline CPI actually declined by 0.1%, which is quite a surprise given the expectations of a small increase. And when we look at it year over year, the headline CPI only rose by 2.4%, well below forecasts. Now you might be thinking, wait, isn't inflation supposed to be high right now? Well, that's exactly what people were expecting. In February, the CPI actually increased by 0.2%, but when we strip out volatile food and energy prices, also known as core CPI, things are a bit different. The core CPI rose just 0.1%, which is again below forecasts. But here's the thing. This data could be signaling that the Federal Reserve might not cut interest rates at its next meeting in May like some traders were expecting. Prior to this announcement, those odds had been slimming down, but now it seems like June might be a more likely candidate for rate cuts instead. That's because there's still a bit of uncertainty around inflation and what the Fed is going to do about it. Now, let's talk about how this news is affecting the markets. The price of Bitcoin actually rose modestly after the announcement, reaching above $82,000. And while that might seem like good news for Bitcoin, U.S. stock index futures are actually under pressure, with the Nasdaq 100 down 2.7% and the S&P 500 up just 2.1%. So what's going on here? Well, some people were worried about inflation getting too high, which would lead to higher interest rates. But now that we see inflation is actually coming in a bit lower than expected, those worries might be tempered. And that's good news for Bitcoin and other cryptocurrencies, which tend to perform well when the economy is slowing down. Looking ahead, there are still some key economic indicators to watch out for. On Friday, we'll get the Producer Price Index report, which will give us even more insight into inflation and what the Fed might do next. That's all for today on Bitcoin Bulletin. If you want to stay up to date with the latest news and analysis from our team, be sure to subscribe and follow us on social media. And if you have any questions or comments about this story, we'd love to hear them in the comments below.